So good evening, friends. Welcome to Eyeway Encounters. Now, before we get started with the encounter, let me just briefly introduce Eyeway, just in case, because there seem to be a lot of new people on the platform. So let's talk Eyeway first. Eyeway was set up to provide information for people who are blind. We have a helpline, which is 1800-53-20469. Shabna, maybe you can share it in the chat box. This was started because in 2005-06, when we started a radio program called Eyeway Ye Hai Roshni Ka Karwa, a lot of people started calling us up, asking for very interesting information, ranging from personal to professional to government-related queries. And so we research, we give them information, and very often when we don't have the information, we find the information and pass it on. And when it comes to a service provision, so we also connect our callers with people who can help, organizations who can help. And as you know, there are 5.4 million blind people according to the 2011 census. So a big number among them are kind of not reached by services or by organizations or maybe even by the government. So the radio program and the helpline has managed to reach out to a lot of people. And we also are looking at getting regional partners in different states so that we can speak to people in the language of the state and connect people with local services. So that is what we do. And Eyeway Encounters is something which is came into being thanks to the COVID, because during COVID, we used Zoom to connect with visually impaired people across the country. And we had guests coming in every week and speaking on various topics. We had guests who were visually impaired. We had guests who were non-visually impaired. We also had people talking on topics which are mainstream topics. We had Rajdeep Sardesai, who came and spoke about the life of a newsman. There was Nasiruddin Shah and his wife, Ratna Pathak Shah, who did some storytelling for us. There was Amin, who actually talked about storytelling. There was Payal Kapoor, who spoke about Payal Kapoor and Preeti Monga, who spoke about cooking and various topics like that. We have covered public speaking, writing, creative writing. In fact, we did a creative writing session, and that resulted in a four-part creative writing course. And one of our students who participated in that, she went on to win a creative writing prize in a competition she took part in somewhere outside. So we've been having a lot of fun, and now we have a star speaker with us, Kanchan Pamnani, who's an advocate with the Bombay High Court. And I've actually put her in a bit of a difficult situation by giving her a topic which she is not normally dealing with, income tax. I'm sure she pays her income tax, but speaking about income tax would be a challenge for her, but she said, I will take it on. So let's go for it. So Kanchan, the floor is all yours.
It's not Kanchan. No, actually. Window now. Also now a new alert. Get access for you.
1 second.
Discover that access.
Video on? No.
Window now alert.
Can't see you. Oh, yeah, now we can see you, Kanchan. Okay.
Also now a new alert.
Okay, sorry. Thank you, George. And wonderful to be back with Eyeway after 15 years. We haven't lost touch, but we have lost the regular that we used to have, the regularity we used to have. I used to always see you in Delhi, and whenever you were in Bombay, we always met. So lovely to be online now. And thank you for asking me to speak on income tax. It's been an interesting topic. And though I do not practice income tax law today, it's still been a very interesting part of my life. And I'll try and explain why and how. The income tax is like change. I mean, what will always change? And always there will be a progression is death and change And the other inevitable thing is taxes. You cannot do without them. And however much we run away from taxes, they follow us. Just for a second, I'll just pause for a second. Just let me know if the sound behind me is bothering you, and in which case I'm going to change my phone. Is it bothering you all? There is some sound behind me. Now it's off. Is it bothering? No. Okay. Okay, if it bothers you, tell me, please. I will go back to my. I'll go to my phone. Okay, I'm on the computer right now. I'll go on to my phone. Okay, so income tax law. It's a 1961 law. Sorry. Okay, it's a 1961 law, and we have tried at different times. That's the country has tried to change it. However, they tried a direct tax code, which hasn't come about. But we are a little premature in having this lecture today on the 27th, when we have a new budget coming on the 1st of February. So if there are major changes, I will request George to have you back sometime next month, so we can cover those changes as well. But today, we all want to be income taxpayers in our own funny way, because we contribute to society, and we know then that we are earning and a part of society. In that sense, there's hardly 3 to 4% of India that pays the income tax, and income tax is a direct tax. It comes directly onto your income, while GST, other taxes are all on everybody. It goes indirectly onto you. You buy a toothpaste, you have to pay a tax on it, but you're not paying the tax first. It's the manufacturer, etc., who are paying it. So for us, income tax is a very, very major amount, and it's a very important thing. Let's look at the first thing. We all talk about
Kanchan, I'm so sorry I'm interrupting you. The
Yes,
thing
sir.
is, this video will also go on our YouTube. I
Yes.
think the constant noise in the background may be sort
Yes,
of.
so give me a half a second, and I will switch to my phone and my headphones. Okay, just give me half a second. Yeah, sorry about that. I can't help it. It's something outside my office.
Hello.
Yes.
Sorry about it. I put the person on mute here.
Hello.
आतिश, आप ये सेशन जब मैम खत्म करेंगी बोलना, then we will come back to you. अभी मैं आपको म्यूट पे डाल रही हूँ.
Zoom needed a mute currently muted.
Hello, can you hear me?
Mute currently muted. Was it?
Yes, Kanchan, we can hear you.
TR. That needed a
Okay.
Kanchan, I can't hear you. You're on mute.
Video. Okay, can you see me?
No, not right now. Can hear you, but not see you.
Okay. Now, I'm so sorry. I tried both of them, but
No, your video is still paused.
my video is paused. Okay, Shabnam?
No, I can't see you. Now it is, yeah.
Yes, okay, good.
Yeah, I think the network is your bandwidth is low right now.
So can I switch off my video for the time being then?
Yeah, okay.
See me now? Now can you see me? I'm better.
I can see you, but then it's not very clear. It just pauses in between.
Can I speak a little louder for you? Can I speak a little louder? Will it make any sense? Is that okay?
The volume is just
Fact looks very complicated, but इतना complicated नहीं है. Okay. पहले जो बात है कि like 300 sections हैं about and all that, वो उसमें बहुत किचपिच है, क्योंकि हर साल जब भी बजट आता है तो नए provisions आ जाते हैं. It's called the financial bill, and then it gets passed. It becomes a financial act for the year, finance act for the year. And normally it gets passed before 1st April, so that becomes implementable 1st April ke baad. So इसके लिए 1 February से हमें पता चलता है कि क्या आने वाला है और क्या हमें प्रिपेयर करना पड़ेगा for the next year. So 1 February, you'll get a budget, which has one part of it, the government tells you what kharcha is going to do, all the expenses, on what different schemes the government is going to come up with this year, and what other projects, like all the infrastructure projects, the railway, kahan se kahan train jayegi, etc. Okay, पहले railway budget अलग से था, post and telegraph budget अलग से था, अब एक साथ एक ही budget में आता है. So on the 1st of February at 11 o'clock, we will start hearing about the budget, कि कहाँ पहले खर्चा होने वाला है. And the second part comes as to कहाँ से पैसा आने वाला है वो खर्चे के लिए. So that's the adjustments that go into the Finance Act and the Finance Bill first. And वहाँ जहाँ से tax आने वाले हैं, कोई provisions की changes हैं, कोई income tax law में थोड़ी difficulties हैं, वो सब निकल जाते हैं वहाँ. And then they have later on, after the budget is tabled that afternoon, it is then discussed over the next 1 month, and then it gets passed preferably before 1st April of the year. This is the one budget that is going to be before the elections. There will be a small budget in February 24, but normally that will not have everything in it because you don't normally make provisions during the just before the budget, before the elections. You have to give a 6 months gap. So what we'll get now is the main budget and the final budget of the Modi government now. So let's look at what we have right now, and then we'll go there. So who has to pay? An SSC, a person who has to pay taxes, or from who taxes are to be recovered, is called an assessee. Okay. And that's the person all throughout that Income Tax Act is the person to be dealt with. So I, as an individual, I'm an assessee. And what kind of income am I looking at? Income that arises in India. And I'm not getting into the complicated deemed to arise and all those complications and how they arise in India. Those sections I'm leaving out. But basically, what kind of income am I looking at? I'm looking at salary. I'm looking at house property. I'm looking at business and profession, capital gains, and other sources. So let's think about what I, as an individual, Kanchan, get income from profession. I'm a lawyer. I can't run a business. I run a profession. And I have capital gains because I buy and sell shares. And maybe I might get a lottery if I'm very lucky, or I might have horses and I might win in the derby, which means I get a lot of income, hopefully. But well, those are all taxable. Okay. I don't have extra house property, so I cannot give it on rent. So I don't have any income from house property. Nor do I get a salary because I don't have a regular employer. I might get a retainer from a client, which is a consultant, and which again brings me into a profession. And this is very important to what head of income you have to look at. The main thing in this is that in each of these different heads, in the different heads of income, you have to think about what are the deductions within that head. So what we do is all these 5 different heads that we have, assuming that you're such a person who has all incomes from all the different heads. So you do your separate calculations for per head of income. Like I have my profession. I don't have business, but I have profession. So in profession, I'm allowed some deductions. For example, I am allowed some electricity. I'm allowed to deduct things like my travel. I'm allowed to deduct entertainment a little bit. What I spend on a client, supposing I take a client for a cup of tea, I can actually claim that from my income tax income. So the funny incident is, of course, Munabai and what was Jolly LLB, where the guy is slammed with bills for drinking tea in the lawyer's office. Okay. But that's the kind of thing we have. So that's profession income. And I'm allowed some deductions there. But let's look at salary, because a lot of our people today are salaried employees. So you have salary, and your employer gives you regular salary. Even if you don't get that salary and you get it in the following year in April, it's still counted in this year, in the year that you should have got it in. Okay.
And you get a deduction of 50,000 rupees straight away from your salary income. That's the standard deduction. And that's for everybody, disabled or not. And it's very important. There were these clauses on entertainment to some extent, and at a certain level you were allowed entertainment, etc. But most of those are gone now. When we look at house property, if you've given your house on rent, then you can deduct from there your municipal taxes and then 30% of your income straight away. So that goes towards hopefully making the house look a little better for the next tenant, etc. That is your painting, little repairs, maintenance, etc. Okay. And we look at profession. You have, as I told you, all the expenses that I can claim. I can claim my office maintenance. I can claim, newspapers that I buy. I can claim books and periodicals. I can claim things like, printing and stationery and all that. Okay. So sometimes it's nice to be a consultant and not a salaried employee. But then you don't know consultancy, you may not have a regular consultancy. That's fine. But that's what the expenses that I can deduct. If I look at other sources, I'm leaving capital gains for a second. Other sources, you have dividends. You have, you can claim up to 10 lakhs of rupees of dividend is exempt if that income is coming from an Indian company. So dividends is up to 10 lakhs is off. And you have other, your lotteries and all that winnings and from crossword puzzles, etc., etc. All those are there. Okay. That's your other sources. Capital gains is when you transfer an asset, not when you hold an asset. So the main thing in capital gains is if I have a share of a company, I buy Reliance at 200 rupees, I want to sell it at 2,500 rupees. I have 2,300 rupees and I have a tax on that. And that's for shares. Also for long-term, for house property. If I want to sell my house and I've held it for 2 years before, I can buy another house before I sell it, but within the last 2 years. And if I sell it, or if I sell it after 2 years, or and buy another house. So I have that exemption there. All this is important because there is a differentiation between short-term and long-term. Long-term has a lower rate of tax, while short-term has a higher rate of tax. And this is something we have to be, there are so many smaller provisions. If I get into that, we will be in a mess. But this is broadly what it is. What I want you all to also be observant about is there is section 10, which is basically exemptions. It's got nothing to do with what your income is. It's got to do with these particular incomes are exempt. Like agricultural income is exempt. That's why you have a lot of politicians who declare themselves to be agriculturists. So whatever income comes from agriculture is exempt. And also actors and actresses, they also find agriculture a very, so they show themselves as agriculturists, okay? So that's the first deduction you get. Here is a deduction for us, our conveyance. If you're employed, up to 38,400 rupees a year, you can claim as conveyance. And it's been removed for other employees, but for disabled employees, it's there. So you can claim that, okay? Section 10 is important because you get scholarship awards, gallantry awards, etc. All those are exempt. Absolutely not considered part of income. We don't even take it into account when we count the 5 heads of income. Absolutely not. But there's another section called section 80, and it has lots of A, B, C, D, F, O, the entire alphabet and more. Okay. I mean, you can imagine you have TT and all that in that. So in section 80, these are deductions. The law has given us deductions. So when you calculate your full income, that means all the 5 heads of income, your salary, your house property, your other sources, your capital gains, and your profession or business. When you come to a total, from that you can minus something. And these minuses are for, there are special ones for us, and there are special, there are others as well. So one of the ones for us is section 80U. And it's important for us because we do spend a lot of money on our livelihood. We actually spend a lot more just to be at the same spot. And so the government doesn't want to know how much you spend and how you spend, but you're allowed a 1,25,000 deduction straight away from your total income before taxes, so that you can claim that because you are spending a lot more on yourself and on your just to do your work. And you need equipment, etc., travel, cost of human being working for you, etc. So that is how Section 80U works. And if you have a severe disability of 80%, now this is the amazing part of the Income Tax Act is that it hasn't been updated to bring in the new law. That's the RPWD Act. Okay, that's where a little bit of our time needs to be spent in telling the government, please update. So hemophilia, Parkinson's, and new disabilities are not included. They do not get the benefit of 80U. It is still the old disabilities, the blind, leprosy cured, etc., the regular ones, the ones that we know of from the past. Why the Act has not been updated, I don't think we are important enough. And we really haven't had a concerted fight. We also did an RTI once asking the government whether, how many people are claiming this 80U deduction. And they could not give us a number. They had no disaggregated data for this. It's important to know how many of us are claiming it, because then we are the people who are paying the taxes. So we can actually show when we do our advocacy whether there are so many people earning the money and claiming this. And therefore we are taxpayers and we are part of the country and the progressive part of the country. But unfortunately, the data is not available and we haven't been able to force them to do it. Okay, so I am sorry, digressing from the most important topic, but well, it's part of it. So 80U we come back to. This is very important because it is our income. From there, you minus 125, 1,25,000 if you're severely disabled, and under 80% disability, it is 75,000. And this hasn't changed for many years now. So we're hoping that this gets changed in this budget, because really things have gone very expensive. But however, I'd like you to also note, this is what is called the old regime. And I'll come back to this old and new regime in a bit. But 80U is our section. 80 double D. Okay. As I told you, there's ABCD and there's lots more also. So there's 80 double D. 80 double D deals with when you have a dependent, when you are paying your taxes, but your dependent is disabled. So that the same provisions you can minus from your income, 125 or 75 dependent on what certification there is. And here is the important thing, that those who don't have certificates won't even get this. So we need the disability certificate, Section 58 of RPWD Act. And that's why we've been stressing on this. Please get your disability certificates, not your UDID. For those who get confused, this is not the UDID. We're not looking for your card. We're looking for your disability certificate from the doctors. So when you come to 80DD, it is the claim of the parent or of a child for his parent, etc. This is a dependent, somebody who's dependent on you, who's disabled. So from your income, 125 or 75 can be deducted. But please understand that if I take this 80U deduction in my income tax, my parents can't claim this 80DD in theirs. Either I can claim it or they can claim it. So it's always nicer to feel, oh, I'm doing well and I can claim it from my income. That feels very, very nice, more than the 80DD. But well, there are situations where 80DD is also very important. And in situations, it becomes very, very critical for the household. Then we come to 80D. And this is something I had not really researched properly in the past. And I'm surprised because it is quite an important section. This is for your health. Earlier, it was for employees, etc. Now it is for yourself. You can actually spend money on your health and claim it. I mean, of course, then you'll have to show bills and payments made, etc. But this is quite critical here that if you're under 60, you can claim up to 25,000. And if your parents are above 60, then it's 50,000. And so it becomes 50 for your parents and 25 for you, that means 75. And this includes the 5,000 spent on medical reports, etc., for the testing, etc. So it's 75,000 there. But if you are over 60, and I know a lot of us are headed towards over 60, we are going to have 1 lakh if you have parents over 60 and ourselves over 60. So it will be 1 lakh there. But this is an actual expenditure. You will have to keep your bills in already. As that you must, if you're spending this kind of money on all your expenses, on medical expenses. And people do need care. They do need physiotherapy. They do need medicines, testing, blood tests, all that kind of stuff. So that comes within this range. These are the most important provisions that deal with us specifically: ATU, ATDD, ATD, and the conveyance. That's all there is for us, as in the disabled community. Okay. The next part is the capital gains. See, a lot of us are now trading in shares, and I find a lot of people earning a side income from shares, etc.
One sec, Kanchan. This particular section of ATU, ATDD, and ATD.
Yes.
Maybe you might like to take some questions now on this particular section before we get on to the next section.
Okay, sure.
Will that be great?
Yeah, and I will also happily put it up, not now, but I can send it to you all if you all want it. If you give a list to Eyeway, I can, summarize it and send it to everybody, because this is something even I got a little, I was very happy to see ATD actually.
So ATD is अगर आप 60 साल से ऊपर है तो आपको 1 लाख तक आपको कटौती खर्चा मिलेगा.
हाँ. And अगर 60 के below है तो 25 plus 50 अगर parents है तो. हाँ.
Okay, so 75 मिलेगा कुल. अगर आपको 25 मिलेगा और पेरेंट्स को 50,000 मिलेगा.
नहीं, आपके इनकम से 75 कट होगा.
Right.
Agar you're paying the taxes, George, you're paying the taxes. So you're the assessee. Correct. So agar aapne, now I am assuming you're over 60. So, okay. So 50,000 for you. Okay. And if you had parents also, then it would be 50-50. Okay. I'm not sure about that. So 50-50 okay. for you and for your parents. But kharcha karna hai aapko, huh? You have to show the bills. Yeah.
And agar husband and wife dono senior citizens hai aur हस्बैंड दिव्यांग है और वाइफ दिव्यांग नहीं है तो क्या वो भी 50-50 होगा या हस्बैंड वाइफ के लिए अलग होगा?
This is not directly for divyang. Okay. This is not for us directly. It is for everybody. Okay. So it is for expenses made for health, to see that your health is better.
Okay. So अगर हमारा खर्चा 1 लाख तक हो गया है, दोनों परिवार में दोनों टैक्स पेयर्स हैं और दोनों तो 50-50 हमें मिलेगा.
और दूसरी बात है कि दिस इज ऑल्सो इंक्लूड्स योर इंश्योरेंस पॉलिसी. अगर प्रीमियम पे किया है मेडिक्लेम के ऊपर, दिस इंक्लूड्स दैट. इट्स नॉट ओनली खर्चा बट इट्स ऑल्सो योर मेडिक्लेम एक्सेट्रा.
Okay. Right. So Medicare, meaning what you pay for your policy?
Yes. So I pay 46,000 for my mother's policy. So I'm allowed up to 50,000. For my own, I don't have a policy at the moment, but I would be up to 25. So 46 plus 25, but in 25, I don't have a policy, but if I have been to the doctor or if I can get an official receipt from my doctor and the medical expenses, the bills that I get for small things or big things. Okay. Not much.
So this will be over. This is outside what you might claim from your policy. If you claim you have an expenditure of 11 lakhs and you get 9 lakhs from your policy. And the additional amount of 50,000 you can claim from the income, from our income. Okay, got it. Yeah. और कोई सवाल है तो पूछिएगा अभी.
Rajesh Borle wants to ask a question. Rajesh जी, आपको म्यूट करना पड़ेगा अपने एंड से.
अनम्यूट करना पड़ेगा.
हाँ, सॉरी, अनम्यूट करना पड़ेगा. राजेश जी अपने एंड से अनम्यूट करना पड़ेगा आपको। ठीक है, हम फिर दूसरे से सवाल लेंगे अभी, जब तक आप खुद को अनम्यूट करते हैं। बलू करके है, आई एम अ सैलरीड पर्सन, 1 मिनट, मैसेज में लिखा, आई एम अ सैलरीड पर्सन, माई डिसेबिलिटी इज 80%, आई एम करंटली क्लेमिंग अंडर सेक्शन 80U and section 10. Any other sections which I can claim?
80D,
80.
section 80D, 80D. Only single D, huh? Not single D. One donkey, one disability. D.
Under 80D, what I can claim?
25,000 के तक. Expenses
that
and
is-
medical and your insurance policy. 25,000 के.
Okay. Okay, so I have taken a physiotherapy and that I can claim under 80D.
Get a official receipt from your physiotherapist.
Yeah, I have the receipt.
ठीक.
Okay.
Yes.
And also I would like to know, since I am using a prosthesis device, artificial limb, so artificial limb has a cost of 6.5 lakh and it has a lifespan of around 5 to 10 years. So every 5 years I will have to change my prosthesis, which is costing me around 6.5 or something like that, based on the limb I use. Is there any section under which I can claim the depreciation or the amount spent for my artificial limb?
There are depreciation sections. Are you a salary employee? Are you a business?
I am a salaried employee because
No,
see, for a
there's no
new-
depreciation. No, there's no depreciation there. That 1,25,000 in section 80U is supposed to cover you
that's
for
all.
this. Yeah, unfortunately, yes.
Okay, thank you.
Hi, Kanchan. Ankit, this side. May I go for a question, please?
Yes, go ahead.
Name, please give us a name.
Ankit.
So what I wanted to check, like you already covered that most of the cases being a person with disability, we need to have assistance around like physical help or whatnot. That case, if I do have some physical, I mean, kind of a official receipts, right? That okay, this particular person like assistant, and I'm paying that individual for whatever my services. Can I even claim for those bills?
Are you salaried? Are you profession?
No, I'm a salaried person. I do have a regular employer.
Sorry, wrong number. No.
Okay.
No, but
No,
if he's
the reason-
traveling, if he's traveling on official work anyway, I guess the company would reimburse.
Company, yes.
Yeah. But
So what
he
happens
can't-
really is that, the problem is everybody, they want to be salaried. Okay. See, the disability sector is moving and everybody likes the salary thing. Now, over time, when you realize it's better to be a consultant and you'll probably get a lot more reductions. All these reductions I can claim. Okay. So that's the thing. You must look at it very seriously, how the disability sector is moving ahead. I'm not saying we should not be salaried, but salaried has its disadvantage for all salaried, whether you're disabled or not.
Got it. Thanks for the clarification.
Okay. Welcome.
Mohammed Ehtisham. Please unmute.
Okay. Yeah. So
Hello.
I am a government employee. Okay. And I am getting my refund, my refund of my medical expenses to a certain extent, which is equal to the CGHS rates. So, for example, if I have spent 15,000 rupees on some kind of treatment, and I have got back around 10,000 rupees from the government for the expenses. So if the extra amount that is pending, so can I claim that deduction?
Hello. Sorry. What did you say? 15 you got from your employer?
I spent
From the
total
government?
15,000. I got back 10,000 from the employer. So can I claim the remaining 55,000? And what is the procedure? What do I do for claiming the extra expenses?
See, the 25,000, I think you're under 60, so you will get the 25,000, So claim it in your income tax.
So up to 25,000, whatever extra expenses I've done, I can claim
yes. Yes.
with your bills.
And yes, and your ATU, don't forget your ATU then.
Yes, the ATU is very clear. It is understood. It is very plain and simple.
Okay,
But
now let me one second.
This medical thing.
Yeah. Yes, just 1 second. Let me explain to everybody here that there is a couple of years ago in 2020, we came with this, the government came out with this new tax policy, and the old system and the new system. In the old system, you got all the 80s, different 80s. Okay, one of them was the
Sorry, hello,
Provident Fund. Ek minute, hello. I'll stop and I'll ask you 1 second. Huh? So in the new policy, that is anybody who went for the new system, उसमें 80U नहीं है, okay? 80D नहीं है, 80DD नहीं है, 80U नहीं है. And अगर नहीं है ना, the problem है कि ये February में क्या होने वाला है budget में कि I'm not sure because very few people opted for the new system. So agar, I mean, there are only two things that can happen. Most likely that will happen is that either they'll forget about the new system and throw it out and stay with the old system, or they will ban the old system and say, "Sab log aa jao to the new system and we'll give you some more advantages." You know, like they'll move up the rates. I mean, the limits the wo move karenge and rates change kar denge thode. But we have to be very careful on Wednesday. Kya hone wala hai hamara? Okay, because 80Us chal jayega. That's the worry. Okay, Chelly, ask the question, please.
Kanchan, you answered my question before even somebody reads it out to you.
Vasu,
Simon.
you always trouble me. All my friends have banned.
Okay, so I think maybe maybe I'll intervene and ask you to continue, Kanchan. We'll take questions after the next section.
Okay, but George, you have to get me back after 1 week.
We'll get you back.
Yeah, because
We'll get
I
you
know
back.
whenever you have, but this is going to be quite interesting. We'll have to know
Yeah.
what's happened. You know, really, it's just 1
Yeah.
week too early. Anyway,
Yeah.
so okay, so we have come through. Basically, I still want to you'll understand that there are different heads of income: the salary, the house property, capital gains, business profession, and other sources. And each of them has its own set of, you know, add, then minus. Okay, and then you come to a total income section.
Good evening.
Han,
Sorry, I put them on mute. Yeah.
okay, all right. So you add everything, and then you all the 5 different heads you add, and then you subtract the whatever deductions you're getting under 80, and that's very critical. Okay, and when you come to the end, you have a net figure, which is your net income. On that, you pay your taxes depending on the tax rate that you have. The government gives you the tax rate every year, the changes that are there. So capital gain, okay, so since salary, you have the standard deduction and you have this conveyance for disability, okay? But there's nothing major there in terms of deductions. House property, going back to, has this municipal taxes. So house property is when you have given your house on rent. If you have taken a loan to make this house or to buy this house, up to 2 lakhs rupees, you're exempt. Okay, you can remove 2 lakhs from there, from the income that you earn. And the municipal taxes are out, and the balance, 30% you can claim. And the balance, 70% is taxable. So that head of income has only these 2 deductions, municipal taxes and income interest amount spent. And you have to, in this case, you have to be very careful. Both the spouses take a loan, and only one can claim it. No, both can claim it. Okay. It should clearly go out of both accounts, and it should be claimed there. The other thing that is important here is that you have to be the owner. If you bought a place in your father's name, you can't claim any interest here. You have to be the owner. It's very, very important here. A lot of adjustments that we did in the past, adjustments because we were disabled, because people wanted to buy in our names, all those things are now streamlined. We are very much part of society, and very much in every way we belong, and we are the same as the others. Where there's very little distinction between us and the so-called normal regular people, or employees, a business or profession or whatever. Okay, so house property is there. The profession I explained to you again is all the expenses that I make in my office and to do my work. Right from stationery, paper, printing, electricity, telephone. Telephone, I personally have a problem because my phones, I use for personal use as well as for official use. If you have 2 mobiles, then you can claim the one full mobile cost for yourself. In my case, the income tax guy, some in 2007, he slammed me back with, I went in for a scrutiny case because I sold some measly 10,000 rupees ka shares. So there was a scrutiny, and he said, "Oh, madam, what is this? You're using your mobile phone for your personal use also. You can't distinguish ki kaun se calls aapke business ke hai, kaun se calls aapke personal hai." So I got slammed in 2 cases, one with entertainment and one with phones, because I got 1/4 and 1/5 written back. So every year, if I have a bill of 10,000 rupees, in one case it is 1/4 means 25% means I can only claim 7,500. The balance 25% goes out of my personal income. It's a drawing for me. So as far as professional income goes, it's the best one for the deductions. It's a difficult one because you have to keep a count of everything, and it takes a lot of time to sort out. Whatever the incomes are, we have to file returns. I'm coming back to capital gains in a minute, but we have to file returns. The forms that we file, they're called returns. And however much they say that it's becoming simpler, it is not. It is becoming tougher because now they want to know a lot. The income tax government really wants to know a lot about you. So really a lot has to be filled up. And also they send you this assessment at the end of the year or somewhere from the middle of, by say January, February, they start sending you that these are the taxes that you have to pay. And these are your incomes. So you have to check that against the actual income that you have received. And sometimes they don't tally. So, but what happens is these are called returns. These forms are called returns. And there is 1, 2, 3, 4, 5, whatever, 7. I think there's 7 of them. I file form 4. Okay. Salaried employees without capital gains, etc. 1, then something is 2. And it goes on like this. And you have to file your returns by July 31st, unless you are, you have to go into audit. So the year starts in April. You start earning money in April. The first advance tax that you pay is in June. The next advance tax you pay is in September. The third you pay in December. And the fourth in March 15th. All these are 15th of June, 15th of September, 15th of December, 15th of March. You pay advance taxes. If you're salaried, your employer has already cut a tax at source. So you don't have to worry about it. But if you have got capital gains or you have done any business profession with your salary income, you will have to pay the advance tax also. Okay. So I'm just going into the procedure for a minute or two. So, well, until last year, you could fill up your own forms. Then you all know about what happened with the income tax authorities, and we had to file a case, etc. 99% you can now file your returns yourself. So there should not be a problem again. I think it's become accessible, but somebody can recheck that for me later. But we've got a judgment from the commissioner. Okay. So as far as your filing your returns, you've got the dates, and you also have to check whether the tax that somebody is deducted at source has been uploaded or not. Because somebody says, I've cut your tax, I'll upload it, but don't upload it, you will have a problem later. You will have to follow up with them and see to it that you get a credit in your, I think it's called to whatever that number is, AS. Okay, I'll tell you the number in a minute. Anyways, so that is where you got to check. So your returns have to be filed on time, before date preferably. Otherwise, there's whole kind of penalties and all. And if there's a refund, the government actually now starts refunding pretty soon. As soon as your returns go up, within a few days, they start refunding your monies. And they give you a little bit of interest, just a wee little bit of interest on the amount you have given them in advance. It's better for them to give you interest than for you to pay late and therefore pay your interest. Okay. So that's how it is. The next part of the procedure is very simple. There's a scrutiny. Now it is faceless in Bangalore. And of course, you have to synchronize your Aadhaar, PAN, all that has to be synchronized. It gets done, ultimately verified, OTP comes, and it's fine. If you have a major problem, then it goes into a dispute, etc. And then ultimately the Supreme Court is the final answer. I hope we all earn that much money, that we are in dispute at some point of time, but not really that much of a dispute that we need to go through that process, because it's really tedious and tiring. They're still doing 1990s and 2000s, and so 20 years backlog is still there in income tax. But overall, income tax it's a fairly procedural law. Later sections of the law just are procedural. What is most important is the heads of income the deductions that we allowed. If we go abroad and we earn money there and come back and earn money here, then there's a little bit of the double tax treaties that we sign with other countries like the USA, India treaty, etc. You don't have to pay taxes at both ends. Wherever you earn the income, that place will tax you. But if you're a resident of India, etc., it'll come back. You pay some tax in the US, you'll come back to India and pay the difference if the Indian tax is higher than the US tax. If the Indian tax is lower, you'll get a refund. If it's the same, it's okay. It's all over. Okay. So there onwards, we're looking at double taxation, etc. And these sections are, of course, there's a whole lot of it. If you get raided and if the income tax feels that you have hidden money, etc., then they cannot raid you after 7 p.m., but they can start at 7 in the morning, and they can, those problems are there. And that we keep reading the paper about so-and-so got raided, okay? And the income tax is, in a way, the worst possible agency of the government, not of India only, but of abroad also. There is the story of Al Capone, one of the biggest gangsters of the world at one point of time. No agency could get him, no FBI, nothing. Nobody could get him. Ultimately, the IRS, that's the income tax of the US, got him. So we have to be a little careful of the income tax. It's a little complicated in India because of full stops and commas and the changes that keep happening every year. There are more sections below the line. That is, the footnote sections are more because those are the ones that have been repealed, etc., or changed. They are more there than above the line. So now let's get back to our capital gains sections. Capital gains is about capital asset. It must be an asset, okay? And when you sell that asset, you transfer it for whatever reason, it becomes, you have an income on that. And that is your point for starting for your taxation. So I'll do the ones regarding the house property first, because that's something that I, as a solicitor, work with a lot. When you look at, if I bought an asset in the 1990s, my father bought it and I inherited it, okay? I have to look at the rate as of 2001. This is a notional rate because 2001 is the cutoff year as of now. It is the year in which supposedly my office was worth 1 crore, say, okay? My father bought it at 1,25,000 in 1979. And I'm now giving you figures, okay? So assuming as of 2001, it was 1 crore. And it has appreciated, but I have not sold it. So there is no, it's just a notional amount, okay? And this 1 crore I have to get from what is called a ready rec now. It is called circle rate in Delhi. In Calcutta, it doesn't seem to exist because we've been looking for it in Calcutta, but we can't find it anywhere. But it is from neighboring properties, what got sold around 2001, what was the rate at that time. But basically, you need to have a 2001 rate. Then the government, this is called your cost of acquisition, even though you didn't buy it, okay? It is called your cost of acquisition. So that is your first cost. Then the government has indexed this to be 100. So what, supposing my 1 crore is equal to 100. Today, if I sold it, that 100 is 331. And this number keeps changing with the government. Every year they announce this number, the index number. And if you look at any chapter of, any book, you will find this, and online as well. There's a whole table for every year, what is the index number. So that becomes your index cost of acquisition. So technically mine would have been 3 crores, 31 lakhs. That would be my cost of index cost of acquisition. Now, if I sold it, I can also add to this my cost of stamp duty, registration charges at that time. And then if I really spend, the stamp duty, registration charges, the lawyer's fees, the brokerage, whatever I spent at that time to enhance my cost. And all that gets indexed to with that index number that the government gives us. What happens next is I have to deduct it from somewhere. I get a net consideration. Okay, I get a consideration. The sale price. My sale price is, it won't be 4 crores, but say, assuming it is 4 crores. And my index cost after taking everything is 331, even if I have not added numbers properly, but 331. So I have 69 lakhs left. as profit. Okay. Now, I have to also think of current expenses. Current expenses means things like aaj ki stamp duty, transfer charges, brokerage, lawyers' fees, whatever. Okay. I'm come down to 50 lakhs. That's my capital gains. I have my consideration minus my cost is equal to my capital gains. And my capital gains is 50 lakhs. On that, since I've held for more than 2 years, I have a tax to it, which is 20%. And straight away, it's 10 lakhs on 50 lakhs. I get on 40 lakhs. Sorry, 40 lakhs is mine. 10 lakhs is the cost that I give to the government. That's the tax, and that's what I have to give to the government. But what happens here is that I can also invest 50 lakhs into bonds, etc. And up to 50 lakhs, I can invest. So if I had my numbers been 1 crore or something, I would only invest 50 lakhs and I have to pay on the balance. So 50 lakhs is invested into national highway bonds, rural electrification, etc. And they are stuck for 5 years. I get an interest. On the interest, I earn money. Okay, I earn money and I pay tax on the interest. But that money after 5 years is completely free, no tax at all. Okay, so this is how basic capital gains is calculated. It's a sale price minus the cost price, and then the amount of tax, the percentage of tax. The government, being smart as it is, 1% they want the buyer to deduct if it's an Indian seller. They want you to collect 1% and deposit with the government, and then I would have had to claim it from the government. I would have said, no, 50 lakhs I would put into the bond, so there's no tax payable. So why did you cut my amount? But well, give me a refund. And the government will give me a refund because they have to show them the bond copy. Okay. But what happens if it's a foreigner? Then it's a big complication. Then it's a whole lot of, it's 23% they cut, etc. Okay. Unless you can provide a certificate from the income tax authorities. Well, on sale of shares, 1 year is the short term and long term. So short term is 15% straight away. Okay. And long term is 10%. And there is, it is, I think 15% only. And there is a 1 lakh. If you earn long-term capital gains of 1 lakh on sale of shares, that is allowed off. I mean, you don't have to account for it. If you really make more than 1 lakh, then you have to pay tax on the balance amount. And this is a new one. Again, this is again going to change. This has got major changes coming up on Wednesday. At least that's what we've been told. So please wait. In India, there is no inheritance tax. So if your parents give you anything by way of a will, there is no tax. Gift is taxable if it's not beyond it comes under other sources. It is taxable if you're not within the range. If it's family, with an immediate family, it's not taxable. But if it is like from outsiders, it is taxable. Beyond the Chacha Mama, it is taxable. Okay. And it's under other sources and it comes with your normal slabs of income. And capital gains, I will not go further because we are going to change on Wednesday. As far as inheritance tax, it's been a bugbear. In America, there's inheritance tax. There is one in the UK. India had estate duty in 1984, till 1984. And we don't have it right now. We don't have any inheritance tax. You can get any amount of money as an inheritance. Okay. So it is best to wait. Bombay had this provision that you could transfer some assets out without capital gains if it was from an immediate family member. And that could be done while the person was alive. So there was no tax there again. But we will wait and watch. I think I've covered everything that I kind of wanted to cover. Any questions, I'm happy to take them.